Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the definition of an income statement, also known as a profit and loss statement or P&L statement, earnings statement, or operating statement. As I do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, and then we'll go on to look at some examples and let you guys really get a really good handle on the income statement. The income statement is an entity's financial statement that indicates how the revenue of a company is transformed into net income. The income statement displays the revenues recognized for a specific period of time and the costs and expenses charged against these revenues. The purpose of the income statement is to show managers and investors whether or not the company made or lost money during the period reported and how the current period compares to previous periods. Now let's look at an example. For this example, we're going to be looking at the income statement of a publicly traded company in Johnson & Johnson's ticker symbols J&J. You can see this is the income statement. You will also notice that it can be reported in annual periods or quarterly periods. In this particular situation, I'm on Yahoo Finance looking at the income statement. You can find an income statement for publicly traded companies almost anywhere. Google Finance will have it. Your discount brokers will have them. You can actually go to a lot of the companies' websites, and they'll actually have their most current annual report up there for you guys to review. Whenever you're looking at an income statement, you want to keep in mind of what it is, and this is basically showing you a period of time. In this particular case, we're looking at annual data, and we're seeing a couple of years side by side, and there's another one way over here, but you guys can't see it on this actual screen. Whenever you're looking at this, you want to know what it's telling you, and that is, of course, actually comparing the total revenue earned for a specific period of time versus the actual charge of costs and expenses against that revenue. And at the very bottom of the bottom line of the income statement, you will find the net income. So let's go over this. We have total revenue. Okay, we have videos going over every single one of these line items, so that if you want more detail regarding any one of these, you can check them out. But right now, let's make a real quick run of it. Total revenue, of course, would be out here. The costs of the revenue, this would be the actual expense of creating the total revenue, such as the costs of the raw materials or the labor that goes into actually producing the product. And this, after you subtract the cost of revenue from total revenue, you are left with the gross profit. Gross profit, if it's positive, would be a good thing. If it was negative, it would be a bad thing. Operating expenses start to get subtracted after gross profit is figured in. You figure gross profit, and you start subtracting the operating expenses, which would be items like research and development, selling, general, and administrative costs, or SG&A, non-recurring items. These are items that are actually almost every company is going to have operating expenses, but they won't be directly tied to the production of the product that the company is actually generating or the service. So, for example, maybe in here you would have advertising expenses or selling a staff of people that go out there and sell. Also, you would have items like managers' salaries and CEOs' salaries and things like that. Research and development, obviously that's what it sounds like. And then non-recurring events, you want to have to look into the actual footnotes of the income statement. They will actually go into the details of the non-recurring items or the other items that are not as clear, and they'll tell you exactly what is going into them. Different companies will have different things in there. Just important to note that these items could be deducted, or even in some cases you'll find other items that will actually be positive numbers, could be other income and things like that. We'll get to that in a minute. Once you have subtracted operating expenses from the gross profit, you come down to the operating income or operating loss. And the operating income here, obviously, because it's a positive number, we know that it's an income, it's an increase. If it were a negative number, we'd know it to be a loss at that level. Anything above this line right here is going to be difficult for managers of a company to manipulate. They're very particular. GAAP is very particular about what actually goes into these items, so that's important to note. Anything below this line, you get into some gray area where management can start to fudge some interpretations of certain items and create variable different results depending on how they choose to report things. Okay, so let's move on down. Once we have the operating income or loss figured out, we can then start to deduct or charge against the other items will be continuing operations or non-operating income items. So you'll notice here you have total other income and expense. It could be an income or an expense at this level. In this particular year, it was an expense. In this particular year, it was an income. Again, we have videos going over every single one of these details, these line items, so you can know what it's actually being calculated into each one of these things, what parts of the business are there. As you move on down, you'll see income before tax, and then here, right? Okay, then you have the income tax expense, and you have minority interest in some cases. In other cases, you won't have it. Again, I'm not going to go into detail on what these items are. We already have videos on it there. After you've gone through all this line, you get to the net income from continuing operations. All right, if it was a negative number, that would tell you one thing. If it was a positive number, it would tell you something else. Non-recurring events are typically at the very bottom of the income statement. These are, of course, non-recurring events and discontinued operations. You may have extraordinary items, and such as act of God, that type of thing. Effects of accounting changes. Again, not going to go into great detail here. And then once you've subtracted or charged all these items against the operating income, you're left with the net income. In this case here, you can see that net income is listed as a subcategory here, and then they subtract the preferred stock and other adjustments, and you'll notice in this case there was nothing, so this number here is the same as this number here. But this net income is what you're really wanting to talk about when you talk about the bottom line. This is the items you need to pay attention to. This is the income that's applicable to common shareholders or the owner's equity if you're looking at a company. So that's everything that you need to know about the income statement. Just an overview, and everything else that you want to know regarding individual items there, we actually already have videos dedicated to each one of those things, so you can check it out for yourself. Okay, and now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.